Hey everyone, Kieran King here. Amazon.com Inc. has just announced its board approval for a 20-for-1 stock split and the authorization of a $10 billion buyback plan. In this video, we're going to cover what a stock split is, what a buyback plan is, and what are the reasons why a company like Amazon might consider doing this. So firstly, what is a stock split? As you may already know, a company is made up of shares or stock, which shareholders own. So let's give an example. Let's say company XYZ here is made up of 100 shares, and this is split between three shareholders. Shareholder A has 50 shares, shareholder B has 30 shares, and shareholder C has 20 shares. In this scenario, let's say that each share has a market worth or market price of £1,000 a share. This means that if there are 100 shares, technically speaking, the company has a market cap or worth of £100,000. A stock split is when a company decides to increase the amount of shares in issue it has in order to give liquidity of its shares a boost. Now, this is usually done on a 2-for-1 or 3-for-1 basis. But on a typical 2-for-1 stock split, this means that the 100 shares in issue now becomes 200 shares in issue. As a result, shareholder A now has 100 shares, shareholder B now has 60 shares, and shareholder C now has 40 shares. Okay, it's doubled. Now, of course, just by adding more shares doesn't increase the perceived value of a company. So to compensate for there being double amount of shares, the market price of each share will decrease by half. So each share will theoretically be worth £500 each, not £1,000 each. And to round it up, £500 multiplied by 200 shares in issue gives you the same valuation or market cap of £100,000 as before. So why would a company want to do this anyway? Well, let's say shareholder A wants to sell some of his shares to other investors. £1,000 is quite a high price for one share. So by having the price of the shares decrease, it becomes more affordable, therefore more accessible to more people. So in this instance, shareholder A might not find a buyer for a share at £1,000, but may more easily find two buyers for a share at £500 each. It improves the liquidity of the stock. That's the basic gist of it. So let's look at the case of Amazon. Amazon shares are currently trading at around $2,900 a share. This means that's the minimum you need to spend at the moment to buy one share. So their proposed 20-for-1 split would mean that the number of shares in issue will effectively multiply by 20, which means that for every one share you already own in Amazon, you will receive 19 more. This also means that the price of each share will theoretically be divided by 20, or worth 20 times less than it was. And if we take a ballpark market price of $2,900, after the split, this price would come to around $145 a share, a much more affordable cost for the average punter. Now, as many brokerage firms have the options for people to buy fractional shares in expensive stocks like Amazon, the affordability of shares have become less and less of an issue for simply buying and selling. The real advantage for reducing the share price is to do with options trading. Options are bought and sold with underlying values of 100 times that of each stock, meaning that if I were to sell an option in Amazon, it means that option allows the buyer of that option the right to buy or sell 100 shares of Amazon. Therefore, if the price is $2,900 per share, like in this instance, the full value of that position is actually around $290,000, a much more intimidating number to work with. I hope that makes sense. If there's appetite, I will do a few more videos explaining how options work in more detail, as it is a fascinating subject. Anyways, let's move on. Let's look at buybacks now, or share repurchases. A share buyback is when a company chooses to buy back or repurchase a number of shares from its investors or shareholders. So going back to our example of XYZ company with 100 shares issued, the company might say, right, we're going to allocate £10,000 to buy back shares from the market. £10,000 at, say, a current market price of £1,000 per share will buy back 10 shares. So they go out into the market with £10,000 and they buy 10 shares back from the market, leaving the shares in issue as 10 less, and now that company XYZ has 10 shares. Now what happens to these shares that the company buys back? Well, sometimes they're cancelled, but also sometimes they're put into treasury shares. Whichever the case, this means that the total shares in the open market now reduces to only 90 shares. So why on earth would companies do this? Well, there are a number of reasons. Firstly, it is a way for a company to reinvest in itself. Many public companies give out dividends to investors. By buying back shares, it reduces the amount it would need to pay out to shareholders, thus increasing their own money and consolidating its control over itself. Another reason? It may wish to increase the equity value of a stock. If the number of outstanding available shares is reduced to 90 from 100, it means that there is less shares in issue, which means less supply, which theoretically means there's more demand for those that are into supply-demand economics. In addition, a company might conduct a share buyback as a show of confidence to other investors. By using cash to repurchase shares, it gives the impression the company is doing well, can afford to consolidate themselves, and are financially healthy. This makes it more attractive to new investors looking at it as an investment opportunity. And finally, if a company thinks that the shares are currently undervalued, it may buy them in order to actually issue them at a later date when the value increases, thereby making the profit in the difference. So these are a few of the reasons why a company like Amazon may wish to go forward with a share buyback. Its current market cap is around $1.5 trillion, and a $10 billion buyback, which is what the board has proposed, therefore means that they're buying back approximately 0.6% of a company, which is a massive sum. I really hope you enjoyed this one, and if you did, then please smash that subscribe and like button. Stay safe everyone, I'll see you all soon.